All right, let's get right into it. Today we're breaking down the latest Q3 earnings report from Miraial, a really key player in the semiconductor space. We're going to look at what was, honestly, a pretty tough quarter for them, but also unpack their ambitious new strategy for the future.
Okay, let's kick things off with the number that just jumps off the page. Operating profit. It's fallen by more than half compared to this time last year, a drop of 55.1%. I mean, that's a huge deal, and it really sets the stage for the whole story we're about to unfold.
So, a 55% drop in profit doesn't just happen out of nowhere, right? You gotta ask, what's the story behind a number that dramatic? To really get what's happening at Miraial, we've got to unpack the full financial picture. And looking at the numbers here, you can see the challenging environment is pretty clear across the board. Now, that 8.5% drop in sales is significant, for sure, but the real story is in the profitability. That massive 55% hit to operating profit has a direct knock-on effect, leading to a nearly 48% dive in net income. This tells us the pressures on the business are hitting the bottom line hard.
A performance like this rarely happens in a vacuum. So where's all this pressure coming from? Well, the company is pointing the finger at two major external factors, and both are tied to the huge industries it serves.
It seems like they're getting squeezed from two sides at once. On one hand, you've got the semiconductor market. And yeah, it's off the bottom, but it's not exactly roaring back to life. The recovery is really slow and uneven. And then, on the other side, the automotive industry has hit the brakes, which is a direct hit to their machinery business. They're just facing major headwinds from two of their most important markets at the exact same time.
So how did these big market-wide problems actually filter down into Miraial's day-to-day business? To see that, we've got to pop the hood and look at their two main divisions. This is where we can really connect those external pressures directly to the financial results.
And wow, look at this. It is immediately clear this is not a company of two equal halves. The plastic molding business, which by the way makes those critical containers for shipping semiconductor wafers, that is the absolute engine of the company. It's responsible for almost 90% of all their revenue.
And this right here, this illustrates the core problem perfectly. Even in their dominant, most important segment, sales dipped almost 6%, and operating profit just fell off a cliff, down a massive 37.2%. When your main engine is sputtering like that, it's going to slow the whole vehicle down.
And meanwhile, it's not like the other part of the business was picking up the slack. The smaller molding machine segment, that's the one tied to the auto industry, fared even worse on the top line. Sales plummeted by over 22%, with profits also taking a big hit here. You can see how the problems were just compounding across the entire company.
So, in response to all these challenges, Miraial isn't just sitting back and waiting for the markets to improve. Nope. Instead, they're pivoting to a really bold, long-term strategy for growth, looking 5 years into the future.
And you can really get a sense of their mindset from this quote from management. The key here is that they're framing this tough period not as a failure, but as a necessary phase. They're basically saying, yeah, it's tough right now, but this is us building the foundation for what they're calling our third era of growth. That means strengthening what they're good at while also finding new places to expand.
And when they talk about growth, they're not kidding around. Look at these targets they've set for 2028. They're aiming for net sales of almost 24 billion yen, that's more than double their current pace, and an operating profit of 4.7 billion. On top of that, they're targeting a very healthy return on equity of over 11%. These are some seriously ambitious goals.
Now, a key piece of this plan is tackling something that investors watch like a hawk, the price-to-book ratio, or PBR. See, a PBR below 1 can suggest that the market thinks your company is worth less than all of its assets combined. So Miraial is making it a stated goal to push this metric consistently above 1, sending a clear signal to the market that says, we are not undervalued.
So that's the big corporate plan. But what about the investors? What's in it for them right now? Well, this turnaround plan doesn't just have long-term targets. It also comes with a new, more aggressive shareholder return policy that's designed to provide value along the way.
To do this, the company is shifting its focus to a new metric, dividend on equity, or DOE. Now, you might be wondering, why do this? Well, think about it. Unlike a typical dividend payout ratio that can swing wildly when profits are up and down, DOE is tied to the company's more stable equity base. It's a way for management to signal consistency and a real commitment to shareholders, even when the market gets choppy like it is now.
And this new policy, it creates a really strong floor for shareholder returns. Miraial is committing to a minimum payout based on whichever of these two metrics gives a higher amount. It's a dual promise. They'll either return 30% of their profits, or they'll ensure a 2% return on equity. Whichever is better for the shareholder, that's what they'll pay.
And that 30% total return ratio target, that is a very clear signal. It tells investors that a significant chunk of future profits is already earmarked to be returned directly to them, whether that's through dividends or share buybacks. It's a core part of this whole growth strategy.
And so, this leaves us with the central question. Miraial has laid out a clear vision for the future, with really ambitious targets and a strong new commitment to shareholders. But is this forward-looking plan going to be enough to convince investors to ride out the current market storm and bet on that 2028 turnaround? That remains the key story to watch.